Hi,
Hi,
my name is Aisha.
my name is Nazra.
So for today we would like to discuss about financial shenanigans and what is their dirty tactics in attempting to do trick in financial statements.
So the company that we choose is AOL, which is American Online, for this topic of accounting scandals.
Alright, so in this video, you guys were expecting about background and what is their financial tactics and what
Kind of
accounting standard that they did not comply with.
Okay, so the background of the AOL, which is American Online, is founded in 1983, which is founded by AOL. So in 1995 until 2000, the executive of AOL is Steve Keys, and AOL had 31,000 employees. So for the accounting scandal that happened in AOL company is capitalization of advertising costs. So this case involved AOL capitalization of certain advertising costs that should have been expensed as they were incurred. AOL was new and unstable business operation at that time, and thus could not provide the perspective historical evidence needed to reliably estimate the future net revenue it will obtain from its advertising expenditure. This effort involved in distributing millions of computer disks containing AOL startup software to potential AOL subscribers. Largely, as a result of its extensive advertising expenditure, this period was categorized by negative cash flow from its operation. AOL capitalized most of the costs acquiring new subscribers as deferred membership acquisition cost, which is known as DMAC, including the cost associated with sending this to potential customer and the fees paid to the computer equipment manufacturer who bundle AOL software onto their equipment. And it reports those costs as an asset on its balance sheet instead of expenses those costs has incurred. AOL generally amortized the AMC on straight line basis over 12-month period. So, is it legal for AOL capitalize this advertisement cost?
AOL stated that they want to capitalize the cost, but they need to follow the requirement that required by SEC. So the first requirement is they need to make sure that the cost is probable for future economic benefit. The second one, they need to provide persuasive evidence. Third one, about recoverability, how the carrying amount will lead to probable future revenue. And the last thing they need to comply is the information reliable enough for them to capitalize it as an asset. Alright. So for AOL, American Online, to capitalize the cost as an asset, they need to comply with the requirement that provided by SEC. Okay, first thing is they need to make sure that it is probable for economic benefit. So what AOL attempt previously is as they distribute disks and software for the prospect customer. Okay. Alright, they did this thing, but they need to provide persuasive evidence in terms of demographic, pricing, and economic condition. Okay, let's talk about demographic. So during that particular year, in 1995 to 1996, the number of prospect customer increased exponentially, right? So when the number of prospect members increase, they need to cater attractive pricing in order to retain the customer, right? Alright, so regarding about economic condition, AOL stated that their kind of business is volatile. Changes in technology and increase in competition with other provider. Alright, so when we talk about volatile and changes in technology, this kind of information is not reliable because it's exposed to risk. So yeah, this kind of evidence we need it because we want to compare about recoverability. Alright, so why they need to provide this kind of evidence? Because they need to make sure that the evidence is comparable. Okay, because they need to compare at every balance sheet date. Alright, so they need to make sure that is the deferred membership acquisition cost asset can help to provide future revenue, right? But since AOL did not provide enough evidence, so the information reliability is questionable. So in short, what we can conclude is AOL did not comply to SOP 937, which stated that advertising costs need to be expensed in P&L, right? Stop. Alright, so finally we want to conclude that the financial shenanigans that AOL did is they didn't comply to SOP 937, which is integral to GAAP. So AOL tried to shift the current expenses to later period, meaning that they improperly capitalize the cost so that they can amortize it annually in P&L, which is prohibited by SOP 9337 integral with GAAP.